Welcome everyone. We're going to get right into the stock charts. I'm going to show you guys using technical analysis how you can find potentially good, profitable trade ideas and also just really read the market to anticipate where maybe it's heading in the future. It's all about trying to, find out where things are going so we can put our trades down and profit. So we're going to get right into it. Before I do, give me a thumbs up. And if you're new and you want to learn the skill set and how to use technical analysis to find your own trade ideas, take my technical analysis and trading course, link in the description below. All right, so let's get right into the charts. Here is the NASDAQ futures. And the thing I want everyone to focus on right now is the fact that we're just chopping sideways right here. Let me go ahead and grab the tool just to kind of outline this. All right, right here is the rectangle. And you can see basically we're just going nowhere. And basically, this is just big chop city. So the thing is that when I see a market like this, I personally don't like to trade it because I get whipped to death. You'll take a trade at the bottom of a range and, there's a range here. It's just a really tight range. So I'd expect we're going to break one way or the other. And I just don't know which way. So what I like to do on really tight ranges like this is just basically step aside, let things kind of play out, look for the next trend, because this, my style is all about catching trends and taking a position to profit targets. When you're going sideways, you're not trending. So something to look for is a break, either out, above, or lower. Until then, we'll just see what's going on. Again, Thanksgiving weekend right now, so it's a holiday weekend. You'd expect pretty light trading action, and so markets can be pretty whippy. Same deal with the SPY futures. You can see right there, we're basically just, really just going kind of nowhere. We've got this range. It looks like something like that, and it's just this big sideways range. So we need to wait for this to kind of consolidate and resolve out of this range, which way it's going to go. Let's look at the Qs. Same thing, sideways. We've got some support right down here at about 288.55 and resistance right there at 293.53. So it's about a 10-point range. If you measure that out, it's about 1.5%. But again, 1.5%. That when this thing breaks, I just don't like the risk-reward ratio. If you take a trade, maybe you catch 1.5%, but if it breaks against you, I think there's potential for a larger loss. So I'd rather just wait for it to resolve out of this range. Here's the SPY. SPY, the main thing with the SPY here is we've got this area down here. Let me kind of extend that out. And this was the big sideways range that we've been in for quite a while, going back till September. It broke out to the upside and it's tested and held its support right around 351. You can see one test there, and we're not impulsively breaking higher. That's the thing. You had two successful tests and holds of this support, and yet there's no breakout. There's no follow through. It looks right here, they made it look like it was going to go higher, but then it has just slowly drifted lower. So it's not the kind of price action you'd want to see when you have a successful, you had an impulsive breakout right here above that level. This is the level that if you go back, this is the kind of the zone that it was trading in. It was resistance right in here, broke out, failed, marginal breakout here, failed, broke out again with an impulsive gap up, tested, held support, tested again, held support, started to break higher, gap higher, running. Everything is full steam ahead in this situation right here, and yet there's no follow through. It just continues to drift and stay in this area. So I don't know. To me, it seems like it's likely to fail again and break lower. But again, we'll just have to watch and wait for some price action. Probably not going to get it this week. But if it breaks back below this 351 area and starts to, break, you get an impulsive breakdown, this was another false breakout or a bull trap. And if that happens, most likely heading down to the bottom of the range around 321, 321.70. And I would say there's a decent probability we break down through the bottom of the range because of the breakout. When you have a bull trap, all these traders get trapped, and as the selling pressure mounts, momentum to the downside will usually carry this through major downside ranges. So something to look for. Okay, gold continuing to go the direction that I've been talking about for weeks, basically, or months really. You can see here on the monthly chart. Well, let's look at the weekly chart. Monthly's too large of a time frame. Here's your weekly chart. So here is the bull trend, the bull market that gold was in. I think it's still in that trend. That's the major trend. However, this was major resistance right here back in 2011, 2013, about 1790. You can see tagged it 3 times, once, twice, 3. That's all she wrote. And you went into a bear market. Then you created this big basing rounding bottom pattern for like 6 years. And now we started to break to the upside, starting a new bull market. However, we broke above that resistance level right here, and it was impulsive, a nice impulsive breakout. So that is a breakout. However, it's coming back in for a back test. And so once this started to fail and you got this big rejection candle here on the weekly, this bearish engulfing candle, that sets us in motion for a continued drop down back to support. 1790 is support, 1800 right in there. And if you go to the daily, you can see we're just continuing to follow this downtrend line right here with a brief bull trap. It looked like a breakout, but it was followed by a big sell-off day. And that was a bull trap, which means that this is likely to continue lower. And today we're seeing more selling, impulsive selling to the downside. So again, nothing, this just continues to say price is going lower. I think support should be this 1790 area. So where it looks like we're getting there soon. If you look at the daily, we have been building bullish divergence. So maybe a slight, a little bit lower, and we'll probably keep that bullish divergence, something like this. And that might be an objective. It's an objective area to go long this thing and go long gold. Looking at the hourly here, I'm spending a little more time on this because I think this is one of the better trade setups that's starting to set up. So you can see here on the hourly, here we're selling off, kind of coming up a little bit more. And I'd expect us to, head lower, but we're going to probably put in a bullish divergence at some point in time. Maybe not here. Maybe we go a little lower, but something like this where we'll start to see the RSI starting to build bullish divergences where the momentum is gaining and trending up, and yet price continues to work its way lower down to 1790. It's not too much farther down now to get down there. And we'll have bullish divergence potentially hitting major support. It's the most objective long area in a while, in months basically, really to go long. Really since the breakout back here in July of 2020, it will be the most objective area to go long. So don't expect it to just bounce right off of that. We might slice through it a little, but I do expect a major zone of support right around 1790. And you can see the gold miners starting to put in bullish divergence. Look at that, Barrick Gold right there, bullish divergence on the hourly chart. So it just started to build. This is the first time it's been there in a while. And you can see we're making lower prices. It looks like we're setting up in a bullish falling wedge pattern here, something like that. Lower prices, and the momentum is moving higher. So bullish divergence there on Barrick Gold. This can go a little lower, but again, it's diverging. So it's telling you that a trend, this is likely to start reversing trends soon. I'd expect maybe one final push down to that 1790 in gold bullion, and maybe the miners start moving up before that. But again, this is starting to look like a better long. On the hourly chart. Now daily, we don't have bullish divergence yet. So maybe what we need to do is put in, move a little higher and then do one final push down in Barrick Gold, setting up bullish divergence on the daily chart. Again, looks good to me. I would say here's some levels of support. We've got 2261 as well as 2140. It's about 2140. So we'll watch for those and see how that starts to set up. But I'm starting to get interested in going long these things again. XLV continues to go lower. I got short right up here at the break of the trend. I called that out in the video. So we are profitable on this trade as of right now, profitable by about 2%. Again, I'm looking for some of these gaps to fill. 105. You've got to, well, the gap, if I go to the hourly, you can see the gap right there at about 105.76. We got another gap here at 103, 103.60. So I'm looking for those gaps to fill, and we'll probably get a reaction. But ultimately, I see this thing moving down to about this 97. I think we're going to hit that, and then we'll see how this thing plays out. But look for reactions as we fill these gaps. Oh, XLE, something to look for. Obviously, the bullish price action that we've seen right here was forecasted. That's why I got long the oil stocks, and I was long XLE as well. You had big bullish divergence here on the daily chart. See it right there? It was telling you that there was the momentum was starting to become bullish, even as prices right in here kept drifting lower. So again, a lot of people look for they want to get long when they see today and it's up 5% and they say, I'm going to buy oil. When, my trading style is looking to buy these things down here when nobody's really interested. At least the retail money's not interested. They don't see potentially the divergences and the potential for a trend reversal. So that's when I was getting long. This was down here. I think it's probably a pretty good area now to start looking at taking profit. We got a couple things at play here I want to point out. Let me grab the tool. You can see right there, that's an island top reversal or an island cluster reversal pattern, which was signaling, potentially a topping pattern on this rally. And it has proven to be so far the top. Typically, when you have these patterns, the way you trade these, I'll just show you guys real quick, give you guys a quick lesson on these island cluster tops. The way you trade these is you mark out the gap, so it'd be about right there, and you mark out the high. So what you do is when you get these patterns, you can get short on the gap down, which would be right in this area right here. This is where you establish a short, and then you'd want to stop out. Typically, you want to stop out. Maybe you could go all the way to the top of the thing right up here around 46. It's about 47. You wouldn't want to see a daily close above that. If you've got a daily close above that, that's likely it's likely invalidating the pattern. Typically, the most you want to see is about the midway point of this gap. So somewhere right around maybe 44.80. And you would want to see it to start to reject right in that area. So, but a lot of the time when you get the gap, it'll move down, but then they'll do a back test running it right back into this cluster right here. And then that's where it kind of runs stop losses and stuff. And then it starts to fail. So watch for that. That's what it looks like it's doing. I don't know if it's going to go that high, but I would start to look at taking profit in this area on this XLE personally. That's kind of what I would be looking to do. You've got some resistance right here as well, right up there at about 39.30. So we'll see. I mean, look at the FANGs right now. Apple down 2%, Microsoft's about flat, Amazon's about flat, and Google's about flat. But you can see what just one FANG has the potential to bring down the market, basically. So if the FANGs aren't rallying, don't look for a market rally. Even if all these COVID stocks and the Squares and whatever it is, the Neos, if they're rallying, it doesn't matter. The market is going to go where the FANGs go. Because they have them waiting. If Apple sells off 2%, it's the largest company in the S&P 500, and it's going to bring down the S&P 500. So watch the FANGs. That will help you understand the direction. If you see weakness in the FANGs, you're likely to get weakness in the market. Okay, DraftKings here. Let me show you what's really going on. Let me get rid of these lines here. And this is just a projected line right here. So my profit target projection right now for DraftKings is about right here, $25, down to $18.60. So this is my projection line. I just drew that to mark out the flag. But look what we have going on. We have a bullish rising wedge right here, a bearish rising wedge, and we broke to the upside of it right here, but it was just a marginal a marginal price action, and we've since come back down into the wedge. that tells me that this was the fake out move or the bull trap action. And actually what this is going to do is break to the bottom of this wedge down here. We're going to break down and start to head all the way down to those profit targets. Why are those profit targets there? Well, because the larger pattern is a bear flag. There's your flagpole. Here's your flag right here. And you take the flagpole and measure the breakdown point, and that gives you the projected target. Now my line kind of stretches because of the logarithmic scaling that I have, but it's about right there. $25 is a good projected target for this thing, and with this pattern that we see. So if that plays out, that's the target. And from where we're at right now, that's a drop of about 48%. So I like that as a trade right now. I am short this, and I'm looking for this to play out. One thing that you can do is wait for the solid break of the flag. If you want to be more conservative, you can wait for that impulsive breakdown. It's probably going to come in the form of a gap down, but maybe you'll break down, and that would be your sell signal. So you could wait for that. SQ, okay, I am short this. I don't have a large position on it. It's a pretty small position. I'm looking to add to it, but the thing is that I need to see some sort of a reversal candlestick. I don't have a pattern for a breakdown pattern right now. You can see we have this uptrend line right here. It seems to like to do these trend lines where it just kind of, you can see it's uptrending like that. So maybe if you get a break of that on the hourly, that might be a sell signal to potentially add to a short position. But the reason why I like this short, if you look here at the daily, big negative divergence. See that? How the momentum just keeps going lower. Yeah, they can burn through it. If you keep going higher, then you'll burn through the negative divergence. You got to get way up here above this 80 level, which is completely possible. And that's why I'm waiting for breakdowns of the trend line, this hourly trend line or something to add to the position, because if this wants to burn through that divergence, I don't want to have a full-size position and then realize that my divergence got burned through and then I've got to cover and just get out. So I'd rather wait for a break of trend to trigger either a short entry or an add to the position. But as of right now, today's price action is divergent high. So we've got price action right up in here. It's a divergent high. Let me zoom it in here. We're making new higher highs on lower momentum, which means it's a higher probability to fade or fail here. And so you wait for that failure. If it doesn't fail, you stop out. But if it does, then that's signaling that the technicals are signaling that it has a high probability of failing, is what I'm saying. And a profit target, 134.50. I think that's pretty reasonable. Peloton here, just here's your uptrend line on the daily chart. Big negative divergence right there. You can see, oh no, sorry, excuse me. Let me stand corrected. There is no negative divergence on Peloton on the daily. So negative momentum, negative price action. So what I'm looking for is negative divergence on the daily chart to show up. And in order to do that, I think Peloton needs to come up here and do a new marginal high somewhere right up in here above this 137.50 area, just peak above there. So I think it's going to maybe do it on a back test of this trend line, pop above there, make a marginal high, and then fail. So that's what I'm watching for. Until I see that, I'm not taking a position in this one. Qualcomm, I'm short Qualcomm. I got short on the gap up right here. So the day that they reported earnings, it gapped up like 13.5%. I got short on that day right up here at resistance, 147.78. So far profitable in this trade by about 3%. And again, this is how you can short a stock that even though maybe they have great earnings, you can still get short, because the reality is that those great earnings are priced in. And so now we get rejected at resistance. So we keep getting rejected at resistance, and we've got negative divergence right here. Let me mark that out on the daily. So there's your negative divergence. You can see momentum's moving lower, and yet price had kept popping up and tagging this resistance, making a new high on lower momentum. That's negative divergence. That signals a trend change is likely. Then you look for the trend change to happen. So what I'm looking for in this is a move down to the bottom of the channel, right around 133.20. From there, we'll see how the charts look. That's probably an opportunity to take some profit. But if we get a breakdown of that level, then that signals a much larger move all the way down to about 93.72, I think would be in the cards. And that's a drop from where we're at now of about 34%. So that is a potential trade idea. You need to see a break of this lower support line, though, first before potentially adding to a short position. XOM, you can see, continues to, it held support right here. I've had these trend lines marked out for a while. So there's your support, 36.40. And resistance right here at 41. So I think we're going to run up and hit that 41 level. And then at that point, I'll probably be looking to take profit. But again, we'll have to see. For me, I entered this trade on the breakout right here, and I added to it right down here. So just from the initial breakout, it's up about 14%, and up to this 41 is about a 21% gain. Okay, NEO here, and we'll probably wrap up here, but NEO is, here's your uptrend line on NEO. Let me adjust that slightly. It's right about there. And you can see it's making a new high right here, new all-time high, and it is doing it on less and less momentum. There's your hourly chart. Let's look at the daily. Negative divergent high right there. So again, we have negative divergence in NEO. It's just walking up this trend line. You wait for the break of the trend line. That's your sell signal. That gives you the entry, the short entry. And once we get that, most likely this is going to come down pretty quickly, down to about 29.29, and then potentially down to about 9.44 or so. So we're watching for signals or triggers, entry triggers on this one. But it is setting up. It does have negative divergence. That's not a reason to just get short or to divergence is not a reason to get short or to get long. It just gives you an idea that there's a trend reversal likely. So then you wait for the signal or the trigger. Same with Tesla, divergent high as of right now. Now everything's pointed upward, so obviously this could continue to go high and burn through the divergence. And that's why divergence is not a reason to just take a position. You need to see a break of support or resistance levels. So right now, I think a break back below this 462.73, a daily close back below that would be extremely bearish for Tesla, creating a bull trap. And that would be your sell signal, in my opinion. That's all I got, guys. Everything in this video is just my opinion, so please seek financial advisor advice. I'm not a financial advisor, and I'll catch you guys on the next one. Bye.